Dan Willis here, and we're talking about rebuilding credit after bankruptcy, and specifically 4 tools to help with building credit. And specifically what we're looking at and what we're discussing in this video is your amounts owed area with your credit score, which is worth roughly 30% of your overall credit score. It's also called your utilization ratio, and what it's looking at is your total debt versus your available unused credit. And listen, it's okay if you have substantial debt like large student loans, a big car loan, a big mortgage. That's okay. The big takeaway is on revolving credit lines, like a credit card, for example. And just to further this example, let's say you go in and you're applying to get a new car loan. If you go in and let's say you have a credit card with a limit of $1,000, and if your monthly balance is at $979, then you're only going to have $21 of available unused credit. Versus or compared to the guy that walks in, same situations, same credit card with $1,000 limit, but he only has a monthly balance of $300, he's going to have $700 of available unused credit. Quite obviously and quite naturally, the guy with $700 of available unused credit is going to appear to be a much better risk than the guy whose credit card is maxed out. It does make sense. And if you'd like some help, you can get a free credit consultation by calling toll free 1-877-418-7596. Now, the first of these tools is a secured credit card. Most people, many people, especially after a bankruptcy, have trouble getting approved for an unsecured, a traditional credit card. If you can get approved, great, but if you have trouble, secured credit card is the way to go. These will be issued as a major Visa or MasterCard. By the way, new legislation by our government stopped a lot of those bad credit, unsecured credit cards from even being offered. Nevertheless, the big difference between an unsecured traditional credit card and a secured credit card is you have to first make a deposit with a secured credit card with the bank that's issuing you that card. It's a lot like collateral. And this deposit is fully refundable, and your deposit amount, let's say for example you deposit $700, generally and typically you'll be extended a major Visa or MasterCard with a limit equal to your deposit amount of $700 as an example. And often you get to choose the amount. Like you get to choose $700, $500, $300, $5,000, whatever it is you want, and you'll be extended a major Visa or MasterCard with a corresponding limit. And that deposit is fully refundable so long as you keep your account in good standing and you don't default on payments. Now, there will be a nominal annual fee and slightly higher interest rates. And the other thing about this is it will be reported on your credit report as a secured account. So it's not going to help as much. Nevertheless, with responsible use, this can be a very effective way of building and showing positive payment history, responsible use, and improving your relationship with credit and your credit score as such. And when we say responsible use, generally you want to keep your monthly balance at or below 30% of your limit. If you have a $1,000 limit, then you want to keep a monthly balance at around $300 or less. The other last thing when it comes to secured credit cards, please double check to make sure that it will do monthly credit bureau reporting to all 3 credit bureaus. And on the other topic, prepaid reloadable debit cards are another thing that a lot of people look into. And again, due to government interference and legislation, these cards actually aren't extending you any line of credit. You aren't borrowing any money, and as such, they're not going to be reported on your credit report or to the credit bureaus. In other words, it's not going to help you build credit. A prepaid reloadable debit card will not do that. It will give you the purchasing power of a Visa or MasterCard, but it's not going to help you build credit. The other thing, please be careful of these. Catalog shopping merchandise credit cards. Now, when you hear that, you probably are like me and you think of like a Sears credit card where you go to that specific store and you can buy merchandise there. But these don't work like that. These catalog shopping merchandise credit cards, It's the same idea, but they're gonna, especially in the past, before the internet, they would mail you a catalog, and that card, it's not even a credit card because it's not issued as a major Visa or MasterCard, but you could only use that card for purchases out of that catalog. And here's the thing with this. All of these issuers, even still today, they're selling you absolute junk at sky-high prices, and they use really deceptive advertising practices. They'll often claim credit bureau reporting, singular. It's not going to be reported to all 3 credit bureaus. Moreover, it's not going to be reported even as good as a secured account. These are, please don't waste your time, money, and we guarantee endless frustrations. We've yet to hear of one single solitary human being that's had a positive experience, and we've heard tons of horror stories. If you'd like to know more about this, we are going to include a link in the description below over to an article on our website for the full scoop. We also have a free report available there, the 7 proven ways to boost your credit score. Now, the second tool is installment loans. Installment loans would be like a car loan, a personal loan, home loan, etc. These, of course, are going to have higher interest rates, so we wouldn't suggest it if you're financing big money. However, with a small amount, let's say with a car, you pay most of it, but you finance just a little bit of it, just as a credit building expense, this can be worth it, because if you use it responsibly, make on-time payments, it will help your credit. The third item is a cosigner. Please be careful, because it's not worth losing friendships or loved ones over this stuff to get burned. But a cosigner can be very effective with helping you get approval for just about anything, but please use some discretion. And the fourth item is called Authorized User. This is also, you may have heard it called piggybacking credit. And here's the idea. Let's say your spouse or a loved one or a friend has the American Express Black Card where there's no spending limit, they keep low monthly balances, they're in a very secure financial place. They can add you to their credit card account as an authorized user. And so long as they continue to make online payments and keep a low monthly balance, that credit card account is also going to be reported on your credit report, which will help and show it's going to be good for you. However, please be careful, because if life happens and they aren't able to make their monthly payments or whatever, that can damage your credit score. With all these tools, you have to be careful about it, because cosigner, authorized user, with irresponsible use, it can still damage your credit score, even secured credit cards. So of course it does need to be used responsibly, which I'm sure you know already. And if you'd like some help, you can get a free credit consultation by calling toll-free 1-877-418-7596. Again, that's for a free credit consultation, and the toll-free phone number is 1-877-418-7596. This is Dan Willis. We're going to include a link in the description below over to an article on our website for the full story. We also have a free report available there, the 7 proven ways to boost your credit score. Have a wonderful day, and of course subscribe and join our congregation, because coming up next we're going to be talking about actually getting these items off of your credit report. The biggest, the best, the most effective way to get a better credit score. And believe it or not, 2016 alone, over 400,000 bankruptcy items were removed from consumer credit reports. So of course, subscribe and join our congregation. Have a wonderful day. Looking forward to talking to you again here soon.